Market's likely to be quiet. We've got a truncated US session today. Things have been very quiet in Europe this morning. We had some interesting data overnight. More on that in a minute. Really, sentiment was plugged this morning by a record number of new COVID cases in China that really punctured sentiment. Dollar remains quite weak. Obviously, volumes are very, very low. There's many Americans are taking a 4-day weekend. Although I say markets are actually open, the bond market and the stock markets are actually open half a day on Friday. Many people obviously physically at the shops as well as being shopping online. And obviously the World Cup's going on as well this Black Friday as well. England play the United States later on in the day. So let's have a quick look at where we are. Let me just get that right. There we go. This is the euro on the 1 hour time frame. So we're back under 104 this afternoon. We've been over 104. We were over 104 this morning. Went as high as 104.30, and we were at a weekly high at 104.50 yesterday. But we've come down a tad from that. Sterling remains well bid. We were over 121. I've actually got 121 on there. 121's just around there. I mean, 121. 121's just about there, isn't it? 121. So strong rally for sterling as the dollar that started on the front foot on Monday has come off quite significantly later in the week. So you can see here on the daily time frame for cable. Cristiano, good afternoon. Hello, hope you're well. Anything you want to talk about? Anything you want to see? Please let me know. So sterling, this is its 200-day moving average here. We haven't been over this for a long time. So 121.80 is where the 200-day sits. We've been bid from this break at the early part of November. This obviously big candle here we had on the 10th, and we've rallied through the key 120 earlier in the week, over 121 yesterday, and we're holding round about 121 today. So sterling remains bid on a weak dollar. Final one, we'll just have a quick look at before we get into the rest of the market. Anything you want to have a look at? The Australian dollar, again, we'll go to the daily time frame to see what a strong sort of week we've had. Down on Monday, up Tuesday, Wednesday, Thursday. We're down a bit today, but we're back to 67.70 resistance we saw last week as well. But we're holding .67 for the Aussie. So it's a weaker dollar to end the week currently. Good afternoon, everyone. Hope you're well. I don't know where you all are. Frontiers Bagus is saying he's in Malaysia. Oh, Indonesia. Sorry, not Malaysia. Hassan, good afternoon. From Africa this week, the market is very low. Example of Aussie dollar CAD. Well, there we go. We've got the Aussie dollar here. When you say very low, it's obviously because it's a truncated week. A shorter week, basically, a 3-day week. Lots of things were pressed into the beginning of the week. So your example here of the Australian dollar, I've just talked about it, but let's just hit. So here we went down on Monday, followed through from last week's decline. So we went down to under 66. This is 66 just here. Just put 66 in for you. 66 is around about there. So we went under 66 on Monday. There's 66 itself there. Spiked under it on Monday, but since then we've rallied from there all the way through 67. So 100 pip move for the Aussie. Aussie is a nice one. And then we went to 66.70 yesterday. We tested it again today, and we've rolled off a wee bit. So the mantra this week, going into the end of Thanksgiving week, is a weaker dollar, even though we started very much on the front foot. And dollar CAD will be the same. You talked about yesterday about dollar CAD as well. Dollar CAD shows a similar sort of setup. So obviously inverse the other way around. So we were up on Monday and then down for the rest of the week. So dollar CAD's down through 33, obviously way above 30, above 32 and 133 sits around about there. So we went to test it. Sorry, we didn't go under it. We went to test it this week, and it's provided support. So we bounced on 133. We're trading at 133.85 at the moment. Next resistance here on the daily time frame for dollar CAD is the breaking into the upper half of the Bollinger Band, i.e. the 20-day moving average, which sits at 134.35 to the upside. So the trend very much remains sort of down, doesn't it? Dollar down here against the Canadian dollar, against sterling here. It's in the upside. So yeah, it's a quiet week, but there's always opportunities around. Why are you using so many indicators, Kobe? That's a great question. They work for me, basically. You're absolutely right. It's these indicators on this workstation are sort of just built up. But basically, we've got the Bollinger Bands here. I have a trend following. Excuse me. A trend following sort of investor and trader. So, for me, this particular chart, doesn't matter what it is, but for me, I'd be really looking at this level here. This happens to be cable. This red line happens to be the 200-day moving average. Think about what the 200-day moving average is. It's a yearly average. And here we are. This thing is approaching. So it's a big, thick resistance wall. If it breaks through that, it'd be a significant rally higher, one would argue. But at the moment, it's big because it's in the upper half of the Bollinger Band, so that's trending up. The Bollinger Bands are moving up. The rest of them obviously help. MACD is nicely moving up. Stochastic, I'm not a big fan of stochastics, to be honest. Could be if you ask me to put my if I only had to have one thing on this chart, I'd have the 20-day moving average. Okay, hope that answers your question. RSI on here. I haven't got the ATR. I like the ATR as well. That's on this particular chart setup. But RSI gives you a nice, it is what it says. It's a relative strength. So relatively, it's the chart, the RSI is rising, price is rising. That's what you want to see. You don't. As soon as you start seeing some sort of divergence, which we might see when we get to this 200-day moving average up here, that's when you have to look at. Good afternoon, South Africa. Good morning. So it's good afternoon, South Africa. Good morning, Jamaica. Hope your weekend is going well. Good afternoon. Also to prediction. I don't like the word prediction. Financial market company, whoever you are. But what time frame? So the Aussie, as we just looked at, is trending higher. So here, let's zoom in a wee bit. Here we are. So Australian dollar, where are we? We're nearing the end of November. We've had a strong November. We're in the upper half of the Bollinger Band. We're over these faster moving averages. And this red line is the 9 period. The blue line is the 5 period. So we've got the 5, the 9, and the 20 period moving average. So here we moved up. We retraced a big, strong breakthrough candle here on the 4th of November. Breaking over this into the upper half of the Bollinger Band, and it hasn't looked back. So it's on an end of day basis, Aussie dollar traders were long from 64.46 on this particular setup. It broke through. There's a big blue line now. I'm assuming that's some sort of if I zoom in, some sort of down line. Yeah, so there we go, breaking out of the wedge there. We've come back to test it, interestingly, last week or so, but we've bounced off it again. So we're back down, bounced, retracing, so it's bid to the upside. So Aussie remains bid. Where's it going to stop next? Obviously, is the next question. Well, it's still got room to move here as far as the Bollinger Band is concerned. So we need to break basically where we are now, the 67.70 high FMC. I'll call you FMC if you don't mind. Where we are now to take it to the next leg high. If we don't, we're going to perhaps go back to test the 66 level down here. From last week and earlier this week as support in a higher time frame. So I don't know what time frames you're trading on, but it's been a good week for the Australian dollar against the US dollar, and that's been the case across the board. Save Monday, where the dollar started quite strongly. But again, remember, not a lot of volume yesterday. US was closed completely. A truncated half day today, so cash markets very, very quiet. Obviously, the forex markets are running all the time, but volume, the underlying markets are very, very quiet. So we've come off our highs up here at 67.70, and we currently trade at 67.28. And here on an intraday basis, that would have triggered short there this morning. It's been short ever since this morning on that one. If you're an end of it, hour trade, it depends on your time frame, FMC, my friend. Copetti, remove your indicators and use transaction. I could do that. This is just this particular site. I've changed the template. I'm happy to take that off, but there we go. It's actually, let's bring in a new chart. Then with nothing on file, new chart. for the Aussie dollar. So there you go. That's just the price action. This is the default setup. So this is in the hour time frame again. So we've had a strong rally. Even price action traders still want some sort of lows. So got a line here, support level through that, and it coincides with that 67 level, 67.25 to the bottom side. Can you shed some light on gold? It's taken a few questions before we got to gold. Everybody's favourite asset, or seems to be. So gold rallied. This is gold on the 1 hour time frame. So we've been as high as 1761 this week. Congested yesterday, and obviously no direction really yesterday. Couldn't get over 1760, and we've been moving down today to the downside. So on a higher time frame, on the daily time frame, we had a very, very strong rally through this key 200-day moving average, which has been a key level all year, 1760. So we breached it, but we couldn't hold it. So we had a rounding top, we came back down, and we're attacking it from below. So it's still relatively well bid, the gold price, okay, on the story of the weaker dollar. So the 20-day moving average sits there at 1720. The 50-day sits there at 1710. So very close. And we've had a cross here, the 20 over the 50. There's grey line going over the blue line. So it's still relatively bid, and we're extended away from that. The big line is this 1760 zone. So we need to break it and hold it. Looked like we were going up quite nicely, but a really nice tweezer top here. Week before last week I was away, and we retraced, but we haven't retraced that much of the big leg up. Okay, so that's a significant leg up. We've retraced a fair amount, but we're still relatively bid. If I just bring in a new chart and for gold, where's my commodities? Somebody was asking about price action. Let's just show you. Let's take the grid off. Let's take the grid off. I don't like the grid, and I'll put on get rid of the tick volume as well. And what I do want on is the period separators. Okay, so if we go back to this, what we were saying before. So the daily, again, somebody's asking just about pure price action. He didn't like my charts. So let me just. So gold, big bid. So for me, I'd like to see some sort of retracement. So what's my favorite retracement? It's Fibonacci level. So last leg up was here. It took us to 1780 level. We retraced to the first Fibonacci level, broke it and bounced back up. So this is a key support area. Unsurprisingly, it's a big round number, 1750. So 1750, actually 1747, but $3 on the daily time frame. Give or take, it's a zone, isn't it? It's not like nothing's exact. As you see, we try to test this other level. So very, very strong move up. The last leg for November for gold. Okay, so that's our resistance, 1788. If we break below this key 1620 level, we could be moving to the downside. But at the moment, the leg is moving up from this big move down we've had. So we're holding 1750, 1760. If I just insert a very simple 200 period moving average on this chart. I know my friend didn't like it, but if I just put on the 200 period, make the simple moving average, there it is up there at 1800. Okay, the exponential moving average around here at 1760. It's a key level above there where we need to get to. So at the moment, 1750 is holding, resistance at 1760 through here, 1785. This intraday high, this end of day high took us to 1780. So that's that $5 gap, and then the 200-day moving average up there at 1800 on gold. So that's the bias still to the upside. Will this down retrace hold? We'll see. We need to break under 1750, and then the next support sits around here at that 1720 as we saw on the other chart as well. So that's the higher time frame for gold. If you just using that on an intraday basis, you can see the 200-hour moving average was rammed into yesterday, breached briefly today, and then we've come back down from it, and we're trading at 17.47 at the moment. Okay, so that's gold on a. I hope Copey's happy with price action. Okay. If we go back to our previous, my other gold charts, that one, isn't it? My other gold chart here with all lines on that Copey doesn't like. That's still the number. The analysis is still the same. The 1720 levels key. 1760 breaks. This 200-hour exponential is at 1760, needs to break and hold. And this intraday high, we got to 1785, 89 zone to the upside. But you can see we're way above the 20-day moving average and the midline of the Bollinger Band. So it remains bid. Vincent, I hope that's answered your question as well. Lawrence says, I think gold is coming to 1725. Well, we'll see. I mean, don't think, Lawrence. I know it sounds a bit odd. Either use price action, your chart analysis, but don't have an opinion. Opinions don't help you make money trading. You've got to keep your emotions and ideas internalized, write them down by all means, but don't expect, just because you want it and think it's going to go to 1725, don't be surprised if it doesn't. I mean, that's what markets do. They do what they do, very much usually against what we want it to do. And that's why you can't apply normal emotions to trading. So keep it on the outside. Yes, 1725 is a key level. It's this blue dotted line we've got here. We tested it intraday this week. But the price didn't want to go any lower than that. We pushed in a fractal low here. It's above the 20-day moving average. It's above the 50-day moving average. So there's a lot of fresh air there, isn't there, if we want to go down there, Lawrence? So we'll see. Clearly, what's going on is a resistance to this resistance here, the 200. Sorry. This red line here, you see, it's the 200-hour moving average there. So it's the 200-day moving average, which we punctured briefly for 4 or 5 days, and it's providing resistance this week to go to the upside, and that's that key, as I've just said, that 1760 zone we need to break up above. Elsewhere, the MACD is still positive, but the signal line is flattening out here. The histograms are starting to weaken, so we could be perhaps biasing down to this 1725 area again. Lawrence, you may be right, who knows? But 1742, another key level from earlier in the year, has also held this week. So 1742 needs to break before we then test that 1725 level, Lawrence, depending on your timeframes, obviously. The short or faster stochastics, for instance, on this daily basis, is coming out of the oversold zone and actually rising quite positively. RSI fairly flat, 60, not really telling us very much, but certainly there's been lots of pips on the table, biased to the upside during November. So again, remember, go with the flow. Is this strong trend still in place that we saw from this rally, from this test of 1620? That's many pips away at the beginning of November. As November comes to an end, we're still well above that 20-day moving average, and we're even above this short-term 9-day and 5-day moving average as well. So, but we're having problems getting over the 200-day moving average, much more significant than these shorter-term frame moving averages. But we seem to be sort of flattening out at the moment. Jerry, good afternoon. And another request about gold, 1747. Yeah, exactly. 1747. Let's just go back to that clean chart. Where was it? So, kind of grid saying 1747, 1725. So 1725. I mean, this is that's where we are now. 1747, 1725 takes us all the way down to this intraday spike here from yesterday or day earlier this week down here. So intraday, it's certainly banged into the 200-hour moving average and moving down, continues to move down. This is a daily, remember this, what this is. This is a daily Fibonacci, the 23.6 daily Fibonacci. It's not significant necessarily so much on a daily time frame, but it'll come into play on an intraday basis, which is what's happening today. So we've had 2 or 3 up days for gold, and currently we're down here on Friday. Remember, it's a shortened cash week. Civilians, of course, you can use price action without indicators. That's what price action is all about. But even with price action, Gel, there's some sort of levels that should jump out at you. You know, here, let me just take that and take the indicators off this particular chart. So take the 200 period off. Hang on a minute, indicators. New page, delete. There we go. Close. Let me just take the Fibonacci off, delete. Okay. So this is the daily price action for gold. Okay. Yes, you can use. You don't need to use indicators. That's the whole point. People would argue. But again, just looking at what we can see in front of us on the screen, we're going back. Where are we? Back to August, so back to the summer. So it's quite a long trail back. But just you know, your eye isn't automatically drawn to these horizontal levels. I will always argue that a horizontal price level or a horizontal line on a chart is much more significant than a sloping line. But you know, that's a point we can argue if you like. So for me, that is the line that comes in on this particular chart. So it comes in at 1729. So for me, I'd have 1730 on this particular chart. You can't really see that because that's a nice round number. It's provided support, and then it provided resistance. We went crashing down. The other bottom line would be the bottom of this chart, which is through here, really, there. So automatically you start putting sort of lines on. It's just where the supply and demand zone is. It's where the market is in equilibrium. So let me just change the colours of those. We can't see those, can you? But don't get too hung up on a particular approach, or you know, price action is all, indicators are rubbish. Don't use indicators ever. Use something that works for you. As I said at the beginning, I'm a price action, chart action, trend following sort of trader and investor, and always have been. Nothing's going to change now. I'm too long in the tooth. But trade what works for you. This is the daily time frame. This might be too far, too high a time frame for many people. Many people can't, you know, the targets, the stop losses are too big. It's taking up too much margin. You can't do enough trades. So, you know, people are at the other end of the market, the 5-minute chart, or even let's go right to the other end, the 1-minute chart. Well, you know, charts are charts, candles are candles. They do the same thing in 1-minute time frames as they do in 1 monthly time frames. They go up or they go down. So again, all we've got here on this 1-minute time frame, again, you've got some sort of level that we're sort of running through. Where we are now, 1747 seems to be where we're banging into at the moment. So I mean, it's been going down since whenever it was. I don't know, since 3 o'clock. It's found a floor here. So if I just sort of woken up and come in and looked at this chart, that's my floor there, 1746.20. Price seems to be pivoting through 1747, and we seem to, at the moment, on the 1-minute time frame, seem to have a top at 1748.50. They're the 3 levels that my eye is automatically drawn to on this chart. So again, depending on how we rejected that, and we're testing this floor. So I'll now be looking for a direction from here. I'm either going to go long or I'm going to go short. At the moment, I'd be looking to take a long position through here at this 1747.40, because this 1740.20, let me just put this down right, 1740 itself, 1747 itself has provided this support from 320, from 330, 340, where you did go under it for a few minutes, we went back at it. So at this moment, this is our support, and it's ticking up. Will we get back through 1748.50? We'll see. You know, it's $1.50 on the gold to the upside here on this 1-minute chart. So again, it's all about your approach and trading is very much all about you. It's not about, you know, following, you know, guys like me or Andrea or, you know, other brokers or other guys on YouTube or buying the latest EA or anything. It's understanding yourself, It's trading the time frame that fits you. It's trading the asset that fits you. It's understanding the asset you're trading. Many people jump into the gold market not really understanding what they're trading. Do they understand about the issues about mining and the politics around gold mines, the politics around gold brokers and gold companies and commodity companies, all that sort of thing? Give yourself a bit of an edge. Give yourself a bit of a chance to understand what you're looking at as much as you can. But it's really very much down to you. Am I saying gold is buy at 77.50? I don't know what you mean. You mean 17.70.50? Oh, right. Sorry, it was a misspelling. It was 17.57.50. Well, I say, depending on the time frame again, here as I just said literally 2 minutes ago, it seemed to be a buy here at 17.47 for me, looking at this on a 1 minute. But we only got halfway through our current range, didn't we? There's 17.48.50. We got our 75. We got nearly $1 rally, and now it's coming back down. So, I'm not saying you're buying it here, but obviously always trade with a stop loss, always trade with a target. But it's depending on your time frame. I don't know what time frame you're talking about, Adeshina, but let's just go up. So that's the 1 minute. Those lines become obviously more irrelevant as we go up the time frame. Yeah, it's still holding on the 5 minute time frame, isn't it? 15 minute, it's much less relevant. The 15 minute is down, retracing down, so it's sort of really down the 15 minute time frame, isn't it? 30 minute time frame, very much down, retrace down again. So that's our low, really, on 50 minute. And we go to the 1 hour time frame. Well, it's rolled over, it broke through. There's a bit of support. That was our sort of pivot from yesterday. I haven't got the pivot point here, but that's round about our pivot yesterday. 17.55.75. We broke that on that big down candle here at 9 o'clock this morning. So it was a European market. So it's been down for the whole European session gold, hasn't it? You'd say, because we got by 10 o'clock, we were below the low of yesterday. So it's having tried to move higher again today. So it's been biased to the downside all day. So we had a big down hour 9 till 10, and we've just had a big down hour 3 till 4, 1500 till 4 o'clock. So just I started talking. So it's really biased to the downside here, isn't it? And these are higher time frames. Remember these lines here, the 1 minute time frames. So quite nicely captured that rally in the last couple of hours or so for the 1 minute time frame. So gold is biased to the time frame. Adeshina was saying, what's he doing? Buy at 17.57. Well, maybe 17.57's up here or up here. In fact, it's all the way up here, isn't he? He's saying buy it here. So yeah, maybe depending on the time frames again. 4 hours. 4 hour trader, they're top there, 17.55, big low down here, 17.30, and the daily, big old rally for November, and we're sort of consolidating here, perhaps into the end of the month, but again, 17.30 is our low, and we need to break over 17.55 next week to take it higher to test the November highs, which took us all the way to 17.86. So that's gold, my friends. It's all about your time frames, really, and understanding. Again, gold, like the commodities, has a certain leverage, has a certain spread. Understand that before you dive into anything. Joby, I hope I answered your question. That's every time about gold. There's multiple assets to trade, guys. Interesting that everybody's trading gold. I think overall gold has changed to move to the upside because of employment in America is low now. Dixie has changed direction to the downside. Some say stocks and gold rally in November and December. Stocks certainly do rally at the end of the year, and December is better than November typically, but you can never tell until it's over. Inflation is stabilising as well. You could argue, Hillary. Yeah, obviously the jobs report next week is going to be absolutely critical. As ever, last one of the year. There is an argument that inflation looks like inflation's topped out. The yields looks like they may have topped out as well. But you talk about a dollar index here. You can see this is just a 1 hour. We've got to the daily. Let's see what your argument is here. So when we were all the way up here, these dizzy heights at 114 back in September, and we've sort of consolidated for October, and then declined very significantly during November, rejecting 113. But even where we are now, 106.28 for the dollar index is historically a very elevated level for the dollar. So the dollar has had a tremendous year. If we go up to the weekly time frame, see what I mean? Dollar's had a tremendous year, shook out really aggressively on the sudden slowing down of the Fed. Excuse me, and their jumbo 75 basis point rate hikes, but a very, very strong year for the dollar. Shook out very aggressively. Markets go up slowly and they come down quickly. Big down week, lots of profit being bagged here. So, my point, I started this conversation, 106 is still very, very elevated for the dollar. If I go up to the monthly chart, remember this is the monthly chart, November is very, very weak. But as you can see, what a huge 2022 the dollar has had. I mean, it had a very strong 2021, having had a weak 2020 because of the pandemic. But we were all the way down here at 89 or 90, and even 90 is relatively okay for the dollar index. So it's had a really, really strong 2021 and 2022. So you would expect some sort of cooling of that. As I say, things come off really aggressively when they do. So obviously 104 is a big line in the sand technically on our end of day basis. And that brings us back to this, 105 is where the 200-day moving average is, Hillary, for the dollar index. And that looks like that's getting dragged to it, doesn't it? Remember, this is a big, big support. So 105, big line in the sand for the dollar index. I think this is and then the 104 low, I think we went to, did we go to a 104? Yeah, I think we did. This was this this is day. So intraday, we went to 105.11. Sorry, where did I get 104 from? I can't remember. But as you can see here, the MACD's turned negative in the middle of November. We've moved down here on a daily basis, weekly basis. Huge week a couple of weeks ago, at the beginning of November. Consolidated last week, but 106, 105, key to support the dollar. Is this, again, if you were talking about stock markets as well, Hillary, we've had a big rally like we had in the summer for US stocks. So US 500 here. I'll just zoom this in. So we had this. Let me zoom this in a bit. Right. Okay. Sorry. That's not looking. It's a bit messy, isn't it? No, it's too far. So let me just see if I can draw these lines on here. So this big extended rally we had in the summer, the June to August rally. This is like a 15-16% rally, but we ran really, again, people say just use price action, but the 200-day moving average worked as a fantastic barrier in June and has all year. In fact, let me just zoom that in. So we banged into it there and came off. We banged into it here and came off very significantly. This is the 200, look at it, looping over. So we bang off it down, rallied up, banged off it, and here we are now running right into it. So is this, depending on your take, this is either a similar and a smoother rally than we had, but a shorter rally than we had in the summer. Yeah. So some vicious ones. So for me, 3,500, well, not for me, but 3,500 was where the S&P spiked intraday. On an end-of-day basis, 3.6. Here we are, 3,600 is key. Anything over 3.8 is relatively positive. Anything over 3.9 is very positive. But 4,100 is where the 200-day is sitting. So 4,000. This is the EMA, the simple 200-day. If I just change that is a simple. At 4,050. We didn't overshot here, so any overshoot to 4,100 may be positive, but we are entering a positive time of the year, November and December. The huge candle we had here was obviously again in response to the Fed here on the 10th. Inflation. ahead of inflation. I don't know if we rally, but we do really need to break this 4,050 level on the key S&P 500 to take stocks higher. And as stocks have rallied, yields have come down, and as we've just seen, the dollar has come down as well. So this remains to the downside. US markets are just opening. I can see behind me 10-year yields at 3.73, so it's up 36 points. And stock markets have opened relatively flat, something to the downside, the actual stock markets opening. But that's a great question, Hilary. Thank you very much. And is anybody else left here? Have I bored you all silly? I may have bored you all silly. So, it looks like it's topped out and rolled over. Stabilising, Hilary, I think it's a bit of an overstatement. It's certainly come down. We've had this overshoot with 8.1%. So it's come down. But let's see. Carl, good afternoon, or good morning, or good evening. I don't know where you are, my friend. And someone's asking, but the dollar could benefit from risk-averse headline Corona report of China and Russia and EU on the... Well, China and Russia and EU on the way to escalate. Salman, possibly... Carl's from the Philippines. Hello. Good evening. You should be enjoying your Friday evening, not listening to me, my friend, Carl. But just to go back to Salman... you should make me a wee bit bigger. The fundamentals, you're right. We started the week with this worry about corona cases in China and the dollar very much on the front foot. So we just got to, you see here, we had a big, strong Monday. Again, it looked like, obviously ignore what's happened since, but here from Thursday, Friday, and Monday, we rallied off this 106 level, a bit of support. And looked like very positive, didn't it, by Monday? But we didn't break these two huge candles we'd had the week before, or a couple of weeks before, and we couldn't get back over 108. Didn't get anywhere near 108 on Monday, in fact. But since then, the market sort of shook out this idea about the cases, and dollars weakened, but it's picked up a tad today on these record cases again in China, 32,000 odd cases. In China this morning. So, of report from yesterday, Thursday, and then later on in the day, and Friday, there was some more cases as well. And it's the fact that the cases are across the country. They're not, and they're in big cities. They're in smaller rural villages, medium cities as well. So it's quite an extensive spread as well. So. And it's quite significant. Your comment about China, the situation about Russia and the EU, that's really to do with the price cap. The EU and the G7 are trying to negotiate for the oil price, and more importantly gas price. That the gas one's obviously not going to come into fruition. The price cap for oil, for Russian oil, it's very strange, isn't it? We're only going to pay so much for your oil. The Russians have clearly found ways to markets. Other countries are willing to buy the Russian oil and not following the Western sanctions. So India, China, and other countries, Turkey, have been happy to buy Russian oil and trade with Moscow, unlike the rest of the West. And then there's all the smuggled oil out of Russia, out of Libya, out of Iraq. That gets to the market as well. I was looking at something earlier in the month where apparently oil production in Malaysia is twice as much as they've actually produced. So it's clearly the interpretation of that is clearly, where's this oil come from? Well, one would argue could really argue that it's smuggled oil somewhere. But anyway, politics surround markets all the time. So dollar remains weak. This week, having started quite well, so could have a flip around again next week. Who knows, Salman? But we'll see if it does escalate. It's in no party's interest to escalate, to be honest, Salman. Obviously, Russia still needs to find markets, but the oil price is held up. Talking about the oil price, I'll just put the oil price on. Oil prices held up. over the last couple of days on this price cap being higher than anticipated. Obviously, we are in we've broken down. It is moving down. We're under $80 a barrel, but it's ticked up in the last couple of days. The big down legs last week and this week is on this talk of a price cap. We did get this agreement earlier in the week. That's why we had this big down movement to $75 for US oil. It wasn't $75, was it? It was $77, but we're near the $75 level. Let me just put that on there. It's certainly a big round number. Oh, yeah, let's make that. Can't see that, can we? Because it's yellow. Let's make it blue. And $75 level. Here's this line here, $75. So we tested that this week on this expectation. Then we went up, now we're going back down. So again, the oil is trending to the downside. Good afternoon, Jordan. Well, you're not too far from our sat, Salmon. You're just a few hundred kilometres over there, I'm afraid. Okay. Carl, Forex trader from the Philippines. Very good. I hope you're trading with us. If not, why not? But anything I can do to help, anything you're interested in, Carl, let us know. Any particular asset? As I say, it's Friday evening for you guys. But US markets obviously open. So oil, let's just stick to oil at the moment. So oil today as let me put in my okay. So oil today has rallied, basically rallied a wee bit yesterday from this when the announcement of the price cap. There's also talk overnight of the Saudis and the Iraqis agreeing a policy to stabilize oil market stability. I'm not quite sure what that means. Two key OPEC members talking like that, but we rallied to $80, rejected $80, and we come back down in the last 3 or 4 hours and trade at $78 at the moment. And there's that 76 level, and the blue line is our $75 level all the way down here. So that's 76.80, this yellow line here, our low from yesterday. And our high here from Wednesday was back over $80. So rolling over in the last 3 hours. The oil market for gold, dollar yen. Again, another one that's had a really volatile week. I've got the daily up here over. Sorry, it's zoom this up a wee bit. Got to 142 earlier in the week, but a big old move down under 139 into 138 yesterday. Bounced off that, and we're currently holding over 139 again. So 140, the next resistance for dollar yen. To the upside. And I'm going to finish with the euro. I'm surprised nobody's asked about the euro. Where's my euro chart gone? I've lost my euro pair. Never mind. There we go. So euro again, 104 was breached. Earlier today, coming down. This is the 1 hour time frame daily. It's had a good week. Again, just like all the other pairs, shook out on Monday down to under 103, 102.25, and then we've been up Tuesday, Wednesday, Thursday. Went to 104.50, and we've rolled over a tad today, back under 104. We couldn't hold. Look at this. We couldn't hold a break of the 200-day moving average. So we spiked through it intraday, declined from it, ran to it on an end-of-day basis, closed above it, and spiked higher to 104.50 yesterday. And today we come back down below it. So this is a key level now, over 104 for the euro on a higher time frame. So a break and hold of 104 is key for the euro to go higher. Lots of hawkish talk today from the euro, but interestingly, the euro's come down since then. Hawkish talk from the ECB, but interestingly, hawkish talk normally means the euro, it would have benefited the euro. It's shook out from that. We've moved back down on an intraday basis, so back under 104, and as low as, interestingly, in this hour, as low as the 200-hour moving average down here at 103.50 again. That hawkish talk has been shook out quite significantly. Carl saying, "Oh, you're interested in learning to trade, Carl? Okay, well, we've got there's a colleague of mine in the Philippines. Hopefully, we'll be opening an education center in the Philippines shortly in Manila. But she's out on tour at the moment in some of the universities. But find us on hfm.com. Open an account, and we're here to help you, Carl, my friend. But as I say, and this goes for all traders, trading is predominantly a mind game, okay? I've got lots of technical indicators on here and charts, and people are talking about price action today. It's about how you deal with winning and how you deal with losing. It's an emotional business. It's a psychological business, a mindset, being able to deal with winning, deal with losing, accepting you're not going to win all the time, accepting you're not going to lose all the time as well, even when you're on a big losing streak. Don't get too bogged down, but find a time frame, a strategy that works for you. There are hundreds of strategies that work and work well enough. The problem is the trader, him or herself. It's not the broker. It's not the asset. It's your application of the performance. I've been in many seminars, face to face and online, where I've taught trading strategies. Some people have won with them, most people lose with them, and it's not the strategy, it's the application of the strategy by the trader. So you've got to know yourself first and foremost. There's no point in trying to trade on an end of day basis if you want to see, you want to sit there and see some action. Equally, there's no point in trading the 5-minute time frame if you can't change your mind very, very quickly and being in and out very, very quickly. It's all about how you can cope with the stress of trade and the risk and the reward and the inevitable understanding the basics. Get the basics right. Get your foundations correct. Understand leverage and margin, and what forex is, what the commodity market is. Why people trade oil, where people find gold, all that sort of stuff. And you owe that to yourself. Don't get too hung up on the economics or the news announcements, why things looks like it's going down, all of a sudden it didn't go down. There was a good news announcement, but this thing I was trading went in the opposite direction. Why was that? Well, it just does that sort of thing sometimes. For me here, if I was watching this, I was trading the euro. That's a very strong candle because of the size of the body of the candle on this 5-minute chart. It's the first time it's been over this line here in the upper half of the Bollinger Band for a long time. So that would be looking to buy that on that particular move. But again, it's all about the different rules and applications and the time frame that you trade. Salman, my friend, I count on technical when I trade gold. Yeah, absolutely. It's just, and again, it's the time frame you trade. You've got to have rules. There's no point in having rules if you don't follow them in the heat of the trading battle. And for me, obviously, the lower the time frame or the quicker the time frame, like here on the 5-minute time frame. The beauty of the short-term time frame is you're in and out quickly. Your target isn't very far away. Your stop loss shouldn't be very far away. If you're trading on an end-of-day basis, we're talking about hundreds and hundreds of pips sometimes, both for stop losses and targets. You need the patience to let the trade breathe. Have you got that patience? Most people haven't got the discipline to apply it. Some people have. And again, it's finding what works for you. But here on this particular this particular chart setup is a trend-following strategy. So this here on this particular setup here, this is the euro. I know Sam was talking about gold, but this strategy would have triggered long here now 5 minutes ago for the euro there, based on this break of this moving average crossing over this line here. You see the green line has crossed the gold line, and it's also crossed the grey line. That's the two things you need to trigger along with this strategy. And as you can see, we've been on the 5 minutes been short. From here, from 1305 all the way down here. Thank you very much. You would have got out. May have got out there, got short again there, and then got out there. So that one would have been a failure, but you've picked up all those pips there. Again, different ways of trading it, and different rules. If the market isn't trending like it is here, it's going flat or sideways. These trend-following strategies are no good because the market isn't trending. So, as you can see here, it's all about your rules and your way of applying things. So, there we go. Let me just stop sharing my screen. I'm going to let me just show you the calendar for next week. So hopefully you can see that. Yes, okay. So next week, obviously we've got the we've got the end of oops. We've got the end. Oh, sorry. Let me start on Monday. Okay, so next week we've got obviously the end of the month on Wednesday, on Wednesday, yep. And the key event of the week is the non-farm payrolls on Friday. But earlier in the week, there's still lots going on. We've got retail sales to start the week off on Monday out of Australia. We've got GDP from Switzerland on early Tuesday morning. GDP, it's the annual, the most important one here from Canada is this quarterly one, 3.5%, expected to tick up for the quarter. Final reading of that from Canada on Tuesday. The month rolls up on St. Andrew's Day here on the 30th. We got CPI from Australia. We've got PMIs starting for the new month as well. So we've got China kicking off from China on Wednesday. Inflation from the European zone also on Wednesday. ADP ahead of non-farm payroll on Friday. So ADP from the US on Wednesday will be really, really interesting. This squeeze we seem to have happened in jobs. Remember on Thursday, the weekly claims yesterday were 240,000. So it looks like the rise in inflation, in interest rates is starting to have a bite on the jobs market. It's been incredibly resilient. See what the ADP comes in at on Wednesday. It's expected at more than half from last month's reading. Final reading of GDP second reading of third quarter GDP, 2.6% for the US market. That's the key one to look for on Wednesday to end the month. And then we have Chair Powell testifying to Congress on Wednesday as well. I think that's I'm not sure what that's going to tell me what that is. No, it doesn't tell me what it's about. But I think it's he's testifying to Congress on Wednesday. So Thursday sees the start of the new month. So lots of volatility potentially into the end of November or balancing of positions. And then Thursday kicks off with retail sales out of the Eurozone area. The key PCE number, this only gets a medium yellow indicator, but the PCE numbers, I find that quite key from the US on Thursday. And also the weekly claims. Remember, as I just said yesterday, 240,000. We're expected around about 220,000. So they're back above their average, their normal economic cycle average at 240,000. So see what that looks like. The continuing claims were much higher last week as well. So that'll be interesting, obviously. So we've had the ADP on Wednesday. We've got the weekly claims on Thursday. And then along with PMIs out of the US as well on later on Thursday, the ISM ones, the manufacturing ones, services ones, next week. And then on Friday, we've got both the jobs numbers from Canada and, more importantly, the United States. So a decline of payrolls of about a negative 30,000. Interestingly here, look at this. A decline in new jobs for November. We'll see what that number comes out. Strongish last month as well. Mixed, really, last month, showing that the impact of the Fed actions putting interest rates up 75 basis points so aggressively so many times is starting to have an impact on the jobs market as well. So really, really interesting final reading for non-farm payrolls for the year on this time next week, basically. So see how that pans out as well. Unemployment still, historically very, very low at 3.6%. Might slip again. Went up to 3.7% last month, but see where that pans out as well, because that's the consequence of this relentless, quick reaction to putting interest rates up. Is the impact on the jobs market, which you haven't seen for a while. It's been very resilient. Many sectors still worrying about recruiting people, and finding the right workers. But you see this squeeze in jobs is it looks like it may be finally starting to happen. So the argument continues. Will we see only a 50 basis point hike? That looks absolutely priced in for December now, going into the new year as well, January, February, and then the high, the cycle high, the terminal rate, as they call it, round about 5% into May and June for interest rates before possibly starting to cut at the end of 2023. But again, that's obviously a year or so away. That's still 12 months away. But that's where the market is with regard to its expectations. So that's next week, key week. It's the end of the month. We've got that wrap up into the middle of the week. And also, sorry, I'm just having a look at. Let me just bring my charts back. Also, at beginning of the month, and that key non-farm payroll data on Friday as well. Saying hello from Laos. Hello, Laos. Hope you're well. Well into your Friday night. You shouldn't be sat there listening to me. Go and enjoy your Friday, my friends. It's the euro up here and on that 5-minute chart ticking up quite nicely. So any more assets, my friends, before I go? I'll just hang on for a couple of seconds because it takes a while for these updates to come through. If not, I'm going to call it a week and start my weekend. It's nearly 5 o'clock here in Cyprus, so I think I deserve it. Let's see euro up the last 20 minutes. So we've got the stock markets, S&P 500, this is the futures market. Where have we been? We've been sort of slipping today. This is the 1 hour. This is the S&P 500. I know the Nasdaq's moved much more aggressively down today, but it's had a relatively good week. Sort of down Monday, up Tuesday, Wednesday, Thursday, and down today at the moment. So 12,000. We couldn't quite breach 12,000 again. There's 12,000 there. And hold it. We played with it. I got towards it yesterday, and we're trading at 11,780 at the moment. So, any more requests for any particular assets, time frames, price action on indicators or no indicators? It's up to you guys. Please let me know. Otherwise, I'm going to call it a day and wrap with the euro back at 103. Where are we? 103.85. Still shy of 104, but it's had interesting to say it's bounced off this 103.50 test, and it's having a good hour at the moment. But interestingly, I thought it might have had a stronger day than it's had. Reading some of the comments, but clearly, here on the 1 hour time frame, there's our fractal highs and our fractal lows yesterday, sideways, and again today we're just under that. So get back into this region. We might have another attempt at 104, but it's had a good few days. The euro against the dollar with a big week to come, with topped by non-farm payroll on Friday. So take care, everyone. There's no more requests. I'm going to call it a day and go and start my weekend. Obviously, World Cup tonight. England playing the United States. Will they play as well as they did earlier in the week against Iran? Iran beat the Welsh today. Ronaldo was lucky to get his penalty yesterday, but what a game that was. 3-2 it finished in the end, and Ghana could have easily had an equaliser, couldn't it? Third goal. But yeah, World Cup, love it or hate it. I don't know how many people like the football and where it's being played. Obviously, it's caused a lot of consternation. But England playing tonight, so best of luck to them. Have a great day if you're trading. Be careful. Obviously, always be careful when you're trading. But low volumes today, so there could be some strange moves. So be careful, but may the pips be with you, my friends. Have a great weekend, and we'll see you all again next week. So take care and trade well. All the best, everyone.